Hello traders, and welcome to the first subsection of the first section within the IPDATrader's private mentorship. And this entire section is going to be dedicated to structure. We're going to be starting out very basic, and we're going to be getting deeper and deeper into structure as you go through the videos, right? And the reason why this is the first section is because really structure is the key. I believe that smart money ideas and concepts are really based on structure. And if you don't understand structure the right way, you really cannot proceed with the rest of the stuff and the concepts. You really need to master structure before you can really consider moving forward, right? So if you're coming from a retail background, you really need to dissect yourself from the idea of price and structure really moving in some sort of a channel, or maybe you believe that the way structure is created is because we're creating resistances and then supports, and those supports push price higher, right? That's really not how it works. And we're going to be taking a look into structure in this entire section. So with all the presentation out of the way, let's actually go to the drawing board and let me start with some very basic stuff about structure. So traders, as I said before, we're going to be discussing structure, right? And we're going to be starting out very basic. We're going to be taking a look into the different types of structure. I'm going to be giving you a rule that you can use to identify a trend, because it's very important and the charts can get very confusing at times, especially if you're looking at the candles and the way they deliver. So let's get started, right? So this is a potential bullish structure, hence a bullish trend, right? And we're going to be getting deeper into this stuff. So the first thing that you really want to get used to is identifying the swing points. Now, a swing point is a price point in the chart where we change direction, right? So if we look here, right, and let me actually add something like this to make this even clearer for you guys. So this is a swing point, 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 right? And we can safely say that this is a bullish trend, right? And we're going to be getting into that. Now, why is this a bullish trend? Well, if we were to follow the swing points, right? If we were just to be looking right here, right? If you were to stop right here and you don't see this stuff to the right, what do we see? Well, we see at this point, this is a low, this is a high. This is a higher low. Why? Because this low is higher than this low, plus it broke structure right here and was responsible for another high, which in this case will now be your higher high, right? So how do we identify a trend? And you're going to be using a rule that I really suggest you do. It's pretty easy. So we're going to be naming it the rule of 4. Now, excuse me, what does the rule of 4 say, right? So the rule of 4 says that in order to have a trending market, you're going to need 4 structure points in the same direction, and that's equal trend, right? That's going to mean you have a trend. The moment you have 4 structure points pointing in the same direction, that's going to be your trend. So let's actually take a look into that, right? Can I move it to the top? Yes. Okay, this is great. You can actually write that down because it's going to be the basic stuff and what you're going to need at this point. So if we were to draw this into a structure, this would look something like this, right? Let me get a smaller size. This is 1, 2, 3, and 4. This right here is your structure. Why? Because we have a low, we have a high. We don't know this is a higher low until we break this high right here, right? The moment we break that high, we understand that we have a new higher high, and this is now a bullish trend. And if we were to be looking at a bearish trend, the same rule applies. You want something like this. You want 4 structure points pointing in the same direction, right? You understand that if we just look at this to the left, you just know that this is a high and this is a low. You don't know this was actually a lower high and this was a lower low until this occurs, right? this partner needs this right here to make a trend and to confirm a trend. So now we understand, if we look at the entire picture, right? Let me remove this line. If we have these 4 points, we know that this is a bearish trend because we have a lower high, lower low. We don't know this is a lower high until we go ahead and break structure right here again, right? The moment we do, we understand that this is a lower high and this is your new lower low. So this is basically how structure delivers and how we can identify a bullish and a bearish structure and trend. So let's continue moving forward. I'm going to delete this picture, so make sure you copy whatever you want to copy, and let's continue and moving forward because we've got plenty of stuff to talk about. So let's get rid of this and let's continue. Now you should all understand that right at this point, this is a confirmed bullish structure, hence we have a bullish trend. Now, if I was to be giving you another leg down, right? If I were to give you another leg down before continuations higher, where should it stop technically to maintain the bullish nature and structure of this market? Well, it can come, what you need to understand is that as long as we don't break below this low, we can come all the way up over here, right? We could potentially go to the edge, but as long as this low is protected and not breached, we are still in a bullish structure. And really, your expectation at this point should be something like this, right? We could potentially reach a 60% or 70%, whatever, it doesn't really matter. As long as we respect this low, we are still in a bullish structure, and your expectation is that this is going to continue until it no longer wants to, right? This is your bullish structure at this point. And you should understand that all these lows right here are protected by structure and by smart money, and we're going to be delivering higher until we no longer do, right? However, once you start looking at your charts and the candles, it can be very different, right? So let me draw a potential bullish market. This right here, right, even though it looks kind of ugly and messy, is still a valid bullish structure right at this point. This is a bullish structure. And reason being is because we're delivering structural points higher, right? We've got a low, we've got a high. We don't know this is a higher low until we break above this high. Now we have a bullish trend, right? We've got one structure point, 2, 3, and 4, and they're all pointing in the same direction. Now we understand that this is a bullish structure. However, as you can see, we've got internal price action, right, that may be showing you something different, but that doesn't really matter. And that's really the reason why you need to be focusing and seeing the bigger picture. You need to understand that the structure point that is protected and that is really going to determine if a structure and trend is going to continue in a given direction is this low right here, this low right here. You need to be looking at the origin, right, at the beginning of the impulse that broke structure. That's really the point you want to have protected, not the internal price action here and looking really at the minus swing points over here. That's not going to make much sense, right? You need to be focusing on the points that actually cause a break in market structure and continue delivering points higher, right? And as we said before, we could potentially retrace all the way down here. This is absolutely valid to then continue pushing up, because that's how actually price delivers. So guys, if this kind of sounds confusing at this point, do not worry, we're going to be jumping into the charts in a second. I just want to get sort of the technical and explanational stuff out of the way first, so that you can jump into the charts with a clear mind and sort of know what you're looking for, right? So now we understand that this is a bullish structure because we're delivering structure higher, right? We're respecting lows and we're constantly making new highs. We understand this is a market that is overall pushing up. Now, how would a reversal or a break in market structure look like, right? And this is pretty important. So let's get rid of this and let's draw again a potential bullish market, but I'm going to be leaving some room so I can draw the reversal. So at this point, all we see is a bullish structure, right? If we were to draw the potential swing points, we can see it looks something like this, right? Again, none of those lows are considered structure because none of these lows actually go ahead and make a new high, right? The new high comes from this low right here. Hence, this is your higher low. Okay. So a reversal, you would just need to apply the rule of 4, but in the other way, in sort of the inverse sense, right? So we understand that, hey, if we were to continue pushing up, we don't want to be breaking below this low because we're pushing up and this is my protected low and this is what actually made a new high over here. Okay, we understand that. So if you see something like this right here is not a shift. It's pretty important that you understand that, because what did we said at the beginning, that in order to have a trend, we need 4 structure points pointing in the same direction. And at this point, all we have is 2 points, right? We have 1 point here, second point over here. We need a third and a fourth point in the same direction to consider a shift. So as long as we don't do something like this is not a bearish trend, right? So the moment we actually go ahead and retrace, and we don't know this is a lower high, guys. We don't know that until this low right here gets taken out, right? So let's imagine we actually retrace, leave a high, right? We don't know at this point this is a lower high, and we continue dropping lower. Now, the moment we break below this low, we now have a confirmed change in direction and we have a bearish trend, right? Why? Because the rule of 4 is fulfilled. We have 1 point, 2 points, 3 points, and now 4 points pointing in the same direction. We now understand that this my expectation within this market could be something like this, right? We can retrace all the way up here as long as we don't break this previous lower high, and we're going to be delivering structure lower, right? This is now what you should expect within this market until it no longer does, right? It may come here, made a new lower high, maybe it comes over here and then shifts back bullish again. You need to understand the dynamics and that market structure can shift back and forth. And if you want to have an easier time identifying trend and structure, you can stick to the higher time frame because those actually prevail. So we understand that this at the time was a high, this at the time was a low, right? If we just had these two swing right here, we know that this is just a high and a low. Now, the second we see that we retrace, fail to break higher, right? We fail to break higher, meaning we fail to make a new higher high. We actually drop lower and break the low. We now have a confirmed bearish trend, right? We have sort of this scenario where we had a high, we dropped down, we broke the first structure point right here, we retraced, we failed to break above, right, and make a new higher high, and we actually broke the low. So this is your bearish trend when you're looking at a reversal. You need the 4 structure points, right? Once again, 2, 3, and 4, and they're all pointing in the same direction, which is bearish in this case. So that is pretty important in regards to structure, right? And let's actually continue and talk about the about a consolidating market, right? A market that is moving sideways. So let's see. Let me get rid of this. Let me remove all this stuff and let's continue. So essentially a market that is consolidating should look something like this, right? You're going to have your low, potentially a high, and you're going to just be ranging inside this area right here, right? You're not breaking any structural points higher or lower, right? Because we understand that this at this point in time is our low, this is our high, and as long as we don't break this high right here and we fail to break this low right here, we're not going to be having a bullish structure, right? In order to have a bullish structure, the market could potentially do something like this, right? It could maybe take out these lows that do not have any importance because these do not cause a break in market structure. So we understand that these lows can easily get taken out without meaning anything in regards to structure, right? We may drop down and then we break the high, and now you understand that, hey, now I have a bullish structure in line, right? We have a low, high. This would now be your high low that you don't know that this is a higher low until we break the structure right here, over here. And then we have a higher high, and now this is my bullish trend right here. And my expectation is that we can come all the way down here, right? As long as we don't break below this point, and this would still be valid bullish structure, and your expectation is that we're going to be making a new higher high at this point. So yeah, this was the technical explanation in regards to trends and structure. I hope this made some sense. Again, take your time, rewatch, rewind. The tools are there. It's just up to you. So now we're going to be looking and jumping into the charts, and we're going to start also very basic, but we're going to be taking a look into candles at this point. So we're finally back on the charts, guys, and what we're going to be doing now is essentially following price, right? We're going to be taking a look into price, seeing how it's being delivered, and this is going to be a great exercise for you to actually track structure and seeing how it delivers. So we're now looking at the candles, and we're going to be starting right here, right? So following the rule of 4, this is a low, right? This is a high right here. Why? Because we break above this structure point right here. So this is a low and a high. This is not a bullish trend just yet. This is just a low and a high. Now, if we follow price, we come all the way down here. And this point right here is actually responsible for a new higher point higher. So now we have a confirmed bullish trend, right? And let me actually choose a different color to draw it out. So if we were to do something like this, maybe we can use black, and we say to ourselves, this is a low, high, potential higher low, confirmed higher low, and a new higher high, right? This is our 4 structure points pointing in the same direction. 1, 2, 3, excuse my shitty drawing, to be honest, and 4. So let's get rid of the numbers. We don't really need that. We understand it now. And whoops, let's continue following this structure, right? So what do we do at this point? Well, we see we should expect, right, that if we're going to continue moving into higher prices, we can come all the way down here as long as we don't break this structure point, right? However, if we look closely, we can see that this structure point actually gets taken out with this wick right here. But as I told you before, in order to have a reversal and a shift, you then should get a retracement, which you actually get, right, until this wick. But we never get a new lower low, which would then confirm your shift. So this is technically still bullish structure, right? This is just a short-term break that then actually goes ahead and makes a new high, right? This short-term break retraces and fails to make a new lower low, so this is not a shift. Okay, so let me get rid of this. So this is actually your new low. We push ahead and we make a new high. Great, we're following structure, right? This is all we're doing. Now we continue. We make a new high low. At this point, we make a new higher high. So expectation is that we're going to be making a new higher low anywhere inside this region. As long as we don't break this low right here, we're still valid for bullish structure. So we follow structure, right? We retrace. However, it is important to understand that in order to have a confirmed higher low, and this is something that I wanted to keep for the next structure video, but we're going to be doing this now because it's important for this activity. In order to have a valid structure point being created, it needs to have at least a 50% retracement within the leg, right? Within the expansion up. And meaning that if we sort of retrace and break up, this is not a structure point if it's not below the 50%, right? Because with probability, this is going to be taken out as liquidity, but that's a topic for a different section, and we're not going to be focusing on that now. So let's continue. We move up, and we actually continue moving up, right? Because this right here, as it just explained to you, is not a 50% retracement, right? If we grab our fib from the top to the bottom, this is actually above the 50%. This is above the 50%. So this is not a valid structure point. Hence, we still continue moving higher. And your actual higher high, right? I made a mistake right here. This is not structure because we continue pushing higher, and your actual higher high is right here, right? We follow structure, guys. We make a low right here, but this low never broke structure higher, so it's not a valid structure point. We continue lower, hence This is actually a retracement on itself. So you can see we hold above this structure, so we're still bullish, right? Let me get rid of this and this. So this is a leg down that actually never breaks structure, so we are expecting continuous bullish pressure. We get a new high. This is now a new high, right? Expectation, high low into a new high. That's exactly what we get. We retrace all the way down and we continue moving higher, right? And I'm trying to get to the point where we actually fail and shift structure, but it looks like GBP USD is extremely bullish at this time. So we continue following structure right here, right? This is not a structural point because we never make a high over here, right? So we continue. This is sort of the same impulse. This is where we make a new high. So the new higher low should not break below this. Great. Continue down. It won't break below. Great. We're still maintaining bullish structure. At this point, continue tracking structure right here. We really make a new high at this point because none of these retracement and this retracement actually retraces enough for it to be considered a new structure point. So hence this is a higher high, right? And this is the higher low right at the bottom. Let me get rid of this. And this is your higher low at this point. So this is where structurally we're heading at this point. Okay, so we continue and let me take a look. Okay, so we retrace, make a potential higher low, right? That is not confirmed because we're not breaking above this yet. So we continue and let's get rid of this because this is looking pretty ugly. This is now gone. Great. Let's continue tracking structure. If we look at this high right here, it actually breaks above it, right? With a wick, but this is absolutely fine. This is considered a break. So expectation is that we're going to be holding this low into a new high. Great, we understand this. So now if we carefully watch, we can see that we actually fail to hold this higher low, and this should give us a heads up that the trend may now be shifting, right? So let's continue watching. Now we've broken this and we know that a potential shift in market structure may be coming. So we follow price, we continue higher, right? We retrace, and at this point, if we were to make a new lower low, we would have a confirmed lower low, and that would mean a shift in market structure at this point. But let's continue following. Let's see what price actually does. So we retrace, we fail to break at this point, right? We never get below this low just yet. We kind of retrace again. This is not a structure point because this didn't cause a high or a low to be made. So we follow price. Now we actually have a lower low that, and if you ask yourself, where did that lower low come from? Well, if you're smart about structure, you should know that this is the point that actually initiated this move down that caused the structure to break. So guys, this was the first video within structure. I hope it was clear and easy to understand. Do not worry, there's going to be more information regarding structure, but I just wanted to sort of guide you through the structure points, how to follow them, what they mean, what is a bullish trend, what is a bearish trend, and we're going to be getting into more detail as you go along the videos. So this point is where you have your shift, right? Just lastly, just to illustrate this, we have a break right here, right? This is our second break, and now we know that this is our lower high, this is our lower low, lower high, and lower low. So the expectation is that we're going to be continuing making a new lower high into a new lower low, right? It can very well take this structure point right here out because the actual causation of this move started over here. So this is your true structure at this point. So we could technically come all the way up here, take this structure point out, and then continue dropping, right? And this should now be your expectation of this market until we do sort of the inverse, right? Once we have a break, a retracement, and another break, that would then shift structure back bullish, and you would now be expecting the same thing, just looking at the other direction at this point. So guys, this was the first video with structure. I hope this was useful, and we're going to be continuing.